This video is sponsored by Empower. It's this cool app that can help you save and budget your money. Download the app for free. Link is down in the description below. What is up, you guys? Welcome back to another video. In today's video, we're going to be covering my top 5 all-time favorite dividend stocks. I'll tell you guys, this was not like the easiest video for me to put together. I never actually taken the time to rank the stocks. Like, hey, this stock's number 1, this stock's number 2, etc., etc. I obviously have a bunch of stocks that I follow, a bunch of stocks that I invest in, and I kind of know whether I like them or not, but I've never taken the time to actually rank them 1 through 5. So that's what we're going to be talking about in today's video. At the end of the video, we will have some honorable mentions that didn't make the cut. We'll highlight a few of those later, and feel free to go ahead. I'll probably put up on the screen here like a little timestamp. You can go ahead and just look at the stocks and just get out of here. But I will just take a quick second to give a couple thoughts on dividends in general, maybe for any new beginners out there. Dividends, investing in dividends, in my opinion, is one of the best strategies that you can implement when it comes to investing in the stock market for a variety of reasons. You know, just to name a couple, when a company pays a dividend, that often shows that the company is in good financial health. They're a financially stable company. That's not always the case. Like, I'm not trying to say, you know, just because a company pays a dividend that they're a healthy company. Of course not. We got a lot of bad companies out there that pay dividends, but when you do highlight a lot of these blue chip companies that have been around for hundreds of years, that have not only paid dividends, but increased their dividends year after year after year, that really goes to show that the company is managing their cash flows effectively. They're able to afford those dividends. As we'll look at throughout the video, a lot of my favorite dividend stocks happen to be more mature companies. So kind of later in their life cycle, in the life cycle of their business. It's not so common to see younger companies like new tech startup, for example. Growth companies are less likely to pay dividends because the money that they do make, if they're even making money, a lot of these companies, like take Lyft as a good example, Uber, which is not publicly traded but will be soon, even a company like Tesla, these companies aren't making a whole bunch of profit. So how can they afford to pay out dividends? And even the profits that they do make, they're likely going to want to reinvest that back into their business, right? That's the phase that they're in, try to grow their business, versus a company like McDonald's or Walmart, who's been around for years and years. They got locations all over the globe. And rather than growing aggressively, they're more concerned with just pulling in income and rewarding the shareholders with a dividend. I also think dividends are extremely important to hold, even for us younger investors. I'm 23 years old and I do love investing in dividends because especially if you're investing in a stock or a company that is increasing their dividend year after year. If I buy a stock today for $100, let's say that stock pays me a $2 dividend, that of course would be a 2% yield. If every year they're increasing that dividend by, let's say 6% or 10%, you know, check back like 10, 15 years down the road, even longer, 30 to 40 years down the road, that $100 investment I make, I could be pulling in literally like $15, $20 dividends. I know that's crazy to think about, but it's very, very possible if you're willing to hold your dividends for a long time. The yield on your cost basis is just going to keep increasing. I do have one more point to talk about, probably rambling like crazy about dividends here, but this was a graph on the screen. I did actually steal this from Cooper Academy. Tristan over at the Cooper Academy channel, he included it in his recent video, and I thought it was a very powerful chart to share with you guys. This shows the performance of Dividend Aristocrats. So a Dividend Aristocrat is a company that's increased their dividend, I believe it's for 25 years, 15 or 25 years in a row, versus the S&P 500 dating back to 1990. My favorite part of this chart here is seeing how dividends perform when the general market, when the broader market is performing poorly. So take, for example, the financial crisis back in 2008. the tech crash in the 2000s, we see dividend stocks holding up far better than the broader market. And it's not to say that you're going to be making money when the market goes down, but they drop significantly less, which is completely logical. And another reason why dividends are such an important part of a portfolio. Take the example if you had two stocks, okay? Let's say you held the stock Tesla, you had $10,000 in Tesla, and you had $10,000 in McDonald's. Now, if you felt that the stock market was going to crash, okay? There's a recession coming, people are going to be selling out of the equity markets. Logically, which stock would you sell first? Would you sell the more aggressive stock or would you sell the more stable stock? I'm pretty sure it goes out saying that you'd rather sell Tesla for this example because it's much more of a volatile stock. You're going to see much heavier swings in a stock like Tesla than you would with McDonald's. And if everyone around the globe, if a bunch of investors are thinking that way, that's going to put a lot of negative or downwards pressure on these more aggressive stocks, whereas the blue chips like McDonald's, who have been around for hundreds and hundreds of years, established company paying consistent, reliable dividends, there's going to be much more confidence in investing in a stock like this, hence why they don't drop as far. And then, when the market starts to bottom out and investors are looking to get back into the market, you're more confident getting back into these established blue chip stocks. Not to mention that you're pulling in dividends along the way. But that's enough rambling about dividends. Let's get on into the video, guys. I will just say, if you enjoy, feel free to give this video a thumbs up. But my number 5, my 5th favorite dividend stock of all time is the company Johnson & Johnson. Currently, as of filming this video, it is yielding 2.58%. And I know that a 2.58% dividend, that's not an extremely high dividend at all. And in fact, it's actually pretty mediocre, but the J&J dividend is a very, very reliable one. Johnson & Johnson is known to be one of the top dividend paying stocks out in the stock market. Just in January of this year, a couple months back, they announced a 90-cent dividend per share. They've been paying dividends since 1944 with 56 consecutive years of increases. We take a look at their recent history. I mean, pretty much year after year, we're seeing that dividend grow, which is something that I love to see. They, of course, have been getting a lot of stick recently because of their baby powder incident with the asbestos in their talcum baby powder. But, just to highlight the share price, it seems as though the stock has almost entirely recovered from that. So it may have been a very nice buy the dip opportunity. And to me, as we've talked about on a previous video when we covered Johnson & Johnson, that's just one incident surrounding the entire company. Not to say that they weren't at fault or that they shouldn't be to blame with whatever happened with that situation, but this company is so much larger than just baby powder. They make Band-Aids, they make a ton of pharmaceutical products. They're actually really big in the medical devices space, so making devices for hospitals for things like surgeries and whatnot. So despite the recent news, which has been negative, this is still one of my all-time favorite options for getting exposure to the healthcare space. I do own the stock. I plan to own it for quite some time, and I'm happy pulling in that 2.5% dividend. That's why it comes in at my number 5 all-time favorite dividend stock. Moving on to my 4th favorite dividend stock of all time. It's a Canadian one. It is the company Fortis with a 3.64% dividend. So definitely a nicer yield on this investment. And Fortis, for anybody not familiar, Fortis is a utility company here in Canada. They also do business in certain parts of the States as well as the Caribbean. And utility stocks are known to be some of the better dividend paying stocks out there. They typically hold up fairly well during recessions because you got to pay for your utility bills. They're often one of the first things that people pay for. If you own a house, you pay for rent. You obviously got to pay for your electricity and your gas, unless you want to live like in the dark, I guess. So really reliable income for utility companies like Fortis. Now, the reason that Fortis comes in at my 4th favorite dividend stock, I mean, it's still one of my all-time favorite dividend stocks, but why it's not up a little higher on the list, there's kind of 2 reasons. The first reason is that when you invest in utility stocks, you're not having a huge potential for capital gain. They're kind of going to be just trucking along, kind of trading within a reasonable band. You know, they're not going to shoot the lights out like some other growth stocks, but they are still great for pulling in dividends. Now, the second reason is that the payout ratio on Fortis is a little bit high. Now, this is not something that worries me. This is a company that can easily afford to pay out their dividends, but we see this orange line here on the screen that's kind of hovering up and down. It's hovering around that like 60 to 80% range. That's their payout ratio. And the payout ratio, just as a quick refresher, basically means how much of the company's earnings or how much of their profits they're paying out in dividends. So very simply, if a company made $100 this year and they paid out $50 in dividends, that would be a 50% payout ratio. If they made $100 and paid out $70 in dividends, that'd be a 70% payout ratio. So it is kind of in the upper range of that band, but again, it's nothing that actually worries me. Another way of looking at it, this is another chart taken from their website, which is kind of a nicer way of looking at it. Reading here, Fortis has a history of 45 years of consecutive common share dividend increases. As well, they have pledged to grow their dividends annually. On average, they're targeting 6% through the next 5 years or so. So I think that this is a great option for getting utility exposure in a portfolio. Like I said, because they do well in a recession, I like to have them in my portfolio. And that's why Fortis comes in at the number 4 favorite dividend stock of 2019. It's my 4th favorite dividend stock of all time. Moving on to my 3rd favorite dividend stock of all time, it is the company Coca-Cola with a 3.41% dividend. And if you've been following the channel for a while now, you guys know that Coca-Cola was the first stock that I ever purchased. It was Coca-Cola and McDonald's a number of years back. And, you know, sometimes I like to remind myself, I kind of think to kind of the way Buffett likes to go about investing. He likes to say that when you invest in a stock, when you go out and buy a stock, you are becoming a part owner of that company. It's as simple as that. A tiny, tiny owner, but you're investing in that company. And you look at a company like Coca-Cola, which in my opinion is one of the most successful companies of all time. This is the type of company that I want to be a shareholder in. I believe there's something like over 1.9 billion Coke products consumed every day. They're apparent in pretty much every square foot of the globe. Anywhere you go, you're going to find Coke products. And as we can read here, 56 consecutive years of dividend increases. It may actually be 57 coming this year. So it's hard to make an argument against being a shareholder in the company Coca-Cola. Now, I would agree that Coke is not necessarily a cheap stock. It currently trades at a PE around 30-ish, which is above the industry average. As well, you could look at their numbers, at their financials, and make the argument that, hey, they're not looking great. We see a decline here in revenue over the recent years with a 5-year negative growth rate of 7.43%. And I will just say, to kind of address that Coke has been going through over the past number of years, they've been going through this, what they're calling a bottling refranchising process or system. It's kind of like a restructuring of the system for manufacturing and bottling and delivering their beverages. So definitely going to be an impact. There's definitely going to be a hit on the shorter term numbers, but this is a really, really smart and strategic move for the long term. It has been a capital intensive project, but it will be saving them a lot of money in the long run, a lot of expenses. So I have no issue with the longevity of Coca-Cola. I don't think that a lot of you guys would either. They've been adapting. We see that with their business model, as well as even their product line, like bringing on healthier beverages. I'll probably be popping a few on the screen rather than listing them. I have done a couple videos on the channel on Coke if you want to go search those up. So despite the complaints of consumers not wanting to drink healthy drinks, I don't really think that's much of an issue for the company Coke. I'm happy pulling in the 3.4% dividend along the way. That's why it's my 3rd favorite stock of all time. Dividend stock of all time. Coming in at number 2, it is Bell Canada. And this one does trade on the US exchange as well with a 5.34% dividend. So very, very high. And Bell Canada is, of course, one of the major providers here in Canada. Not only do they provide internet service and cellular service, They also own a variety of media outlets. Take BNN, for example, TSN sports outlet, the Discovery Channel, just to name a few. But what I really love about Bell stock is that here in Canada, 90% of the telecommunication space revenue, 90% of that revenue is controlled by three companies, the three major providers. So Bell, Rogers, and TELUS. And that right there says it all. You talk about having barriers to entry into a specific niche or into a specific sector or business. That's like the top of the list right there. Good luck for any new companies trying to get in and competing with these big three providers. They basically have Canada on lockdown. They all got their different sections, and that's why they're able to just pull in such reliable revenue and pay out such a high dividend. And Bell Canada was actually one of my top three stocks, one of the three stocks that I'll personally be buying in 2019. It has done quite well as of recently. I have been buying the stock, and especially now that interest rates have started to taper off, we're not likely going to be seeing too many rate increases, if any, throughout the remainder of the year. That does relieve a lot of pressure on these high yielding stocks. But now that that has kind of calmed down, like I said, we have seen the stock start to pick up. And what I do like about Bell is not only are you getting this nice yield, but there is a lot of volatility with this stock. And what that does is it gives me the opportunity to go in and buy these dips, kind of like what we just experienced. So with the potential there for capital gain, along with a very, very nice dividend, above 5%, which is a very nice yield to pull in. This is one of my top Canadian stocks. This is one of my top dividend stocks. This is just one of my top holdings, one of my top stocks in general. It does trade at a PE that's slightly higher than the TSX, but that is something that I am completely fine with. Moving on to my number one stock, my favorite dividend stock of all time, it is Procter Gamble with a 2.76% dividend. And to me, when somebody says the word dividend, Procter & Gamble is the first company that pops to mind. They're kind of like the staple boy or the poster boy. They're kind of like the poster boy when it comes to dividends, not a staple boy. If you're not familiar with Procter & Gamble, you're probably just not aware of it. They're the company that makes Tide, the laundry detergent, Bounty, Pampers, Charmin, a variety of household goods that people need to buy and use pretty much year round, rain or shine. It doesn't matter what season it is. Consumer staples is the term that you'll hear for that. And of all the other sectors, consumer staples would probably be my favorite in terms of pulling in dividend income. And what I really do like about Procter & Gamble, if I pull up the share price here, is they seem to follow a very, very predictable pattern. It's almost like they trade within this range right here. And when the stock drops down for whatever reason it is, it's almost like a no-brainer to me to start loading up on some of these shares. We do notice that they have been on a really nice run recently, a very nice run actually, hence why the yield isn't currently so great. But I can say for certain that we will see a drop at some point in the future, sooner or later, 15%, 20% drop, maybe more. And at that point, if you're not already invested in Procter & Gamble, I'd say consider taking a serious look into it. Reading here, Procter & Gamble is expected to boost its dividend by 3 to 7% in the coming weeks. There's nothing huge, but they have increased them annually for 62 years in a row. That is my all-time favorite dividend stock. For me, it was kind of the clear-cut number one. I kind of had to think about the other ones in order, but Procter & Gamble was definitely at the top of my list. I'll put up on the screen here some other top dividend stocks that didn't make the cut. Maybe you guys are noticing I don't have any financials in my top 5, which may sound odd to you. I mean, the Canadian banks are some of the best dividend stocks out there. They're definitely up at the top of my list. TD, Royal Bank, BMO, Power Corp. I like them all, but they just didn't make the cut. But that'll wrap it up for the video, guys. Like I said, this is just my top 5 list as of today. Things could be very different like 2 years from now, maybe even 6 months from now. I mean, companies are constantly changing, but those are my top 5 in order as of filming this video today. Targeting dividend stocks, in my opinion, is one of the best strategies that you can take. Whether the stock's moving up, down, sideways, you're still pulling in that consistent stream of income. especially Dividend Aristocrats, stocks that are known to consistently pay their dividend and increase them over time. And it's really tough to go wrong, especially if you're willing to reinvest those dividends and just have more money for you to grow over time. I'd be interested in hearing what your guys' favorite dividend stocks are down in the comment section below. Maybe you can leave a list of your top 5. If you guys enjoyed the video, feel free to give it a thumbs up. Let me know your thoughts down below. If you're not already subscribed, subscribe to the channel. I post a video every Monday. You can check out our membership group if you want to join. You'll see my personal portfolio, get email updates whenever I go place a trade. But that'll wrap it up for the video, guys. Thank you for watching. I hope you enjoyed, and I'll see you in the next